Every week, we decode the macro. First, we check the Bitcoin macro and liquidity regime, my custom trading view indicator, tracking liquidity, inflation, M2, the dollar, and momentum across global markets. Then we hit the strategy, my Bitcoin macro playbook, which answers the question, are we risk on or are we risk off? Finally, we cover what data just dropped. CPI, ISM, rates, jobs, cutting through the noise so that you don't trade blind. All right, welcome back, degenerates and all the investors and gamblers out there. This is my favorite video to do every week. This is the Bitcoin macro war room, where we basically break down what the hell happened this week, what were the important data releases, and more importantly, where are we headed? What does this all mean? Are we still risk on? Or are we risk off? What should we be doing in our portfolios? And I'll give you a hint, a whole lot of nothing. If you're long, you should just be holding. If you're not long yet, you better get a strategy to get in, because things are getting hot and heavy, and we're going to jump in. We're going to start off today a little bit different. We're going to do the data releases first, because I think will set up what's happening on the charts. So we'll go into the Bitcoin regime and liquidity tracker after this, but let's start off with what happened this week. I've been including now the medium impact, so the orange folders, because there's some alpha there that not a lot of people talk about, and we'll get into why that is in a second. But let's start off with what dropped on Tuesday, which is all the CPI numbers, right? So core CPI month over month. Core CPI basically strips out food and energy. It's the Fed's go-to inflation gauge. A cooler than expected print, which is what we got, signals disinflation is basically holding, and that reduces pressure on rates and opens the door for easing, right? The Fed has no excuse now. They should be easing. It's liquidity friendly and bullish for Bitcoin because, look at the central bank rates. You have the US still on top, more than double what the Eurozone is currently holding for rates. So core CPI was good. CPI month over month, basically headline inflation came in as expected, up a little bit from last month, but that's no surprise, right? Which means no panic. Markets like that. Bitcoin doesn't need deflation. It just needs inflation to not accelerate. This number keeps risk on bets still good. For CPI year over year, it ticked up slightly. This is the only hot CPI component, but it's still sub 3%, which means no alarm bells. As long as inflation stays below nominal GDP and decelerates over time, the Fed will face basically pressure to cut, which they have been. If you've been watching X or the news, God forbid, you've seen all this stuff come out about Powell versus Trump and him trying to get him fired for all the money he spent on some building or whatever. It's all noise. The biggest thing that I called out here also on my X feed that no one really was talking about is the Empire State Manufacturing Index, which came up with a huge beat. It was expected to be minus 8.3. It came out with 5.5 on the latest reading. And this tracks manufacturing activity in New York, right? And it was a surprise expansion. It shows that manufacturing isn't dead yet. And this bodes well for the ISM and the business cycle to really start accelerating now. The strength here supports the soft landing narrative. And basically, to me, this signals staying risk on is the correct bet. So let's go over to what happened on Wednesday, which was core PPI and PPI month over month. Core PPI measures wholesale inflation, excluding food and energy. A flat print, which would basically what we had, means pricing pressures are cooling upstream, which is good. This gives the Fed more confidence that CPI will stay tame. It's not on fire. We're good. No more, basically means more room for liquidity. It's a stealth kind of green light for Bitcoin, which is good. PPI month over month is headline producer price, right? That also came in flat. Wholesale deflation means that retailers have no excuse to basically hike prices. This reinforces the rate cut thesis. If producers can't raise prices, the Fed has no reason to keep rates restrictive. And that's bullish for risk assets, Bitcoin being the highest beta risk asset you could be in. So all good things so far. We'll go to Thursday, which was core retail sales and unemployment claims. Core retail sales strips out autos and gas. That's important to note. It's a clean consumer demand sort of signal. And a strong print shows that the US consumer is still spending. This slightly complicates the rate cut narrative, but healthy demand and cooling inflation is basically Goldilocks, right? It's the soft landing sweet spot, and that's bullish for Bitcoin as well. All these prints were really bullish for Bitcoin, in my opinion. Retail sales month over month, big headline beat, right, on retail, which, this means that consumers are swiping, right? If spending holds up while inflation cools, the Fed doesn't have any reason to panic. And Bitcoin benefits here as liquidity expectations rise, especially if recession odds continue to drop, which they are. Unemployment claims. This is a weekly read on jobless claims, basically a proxy for, the labor market health. Lower than expected claims means that the labor market is still tight. It's not bearish until it sort of rips higher. So for now, Bitcoin bulls shouldn't care. Recession isn't here yet, and that keeps risk appetite intact. Right. Again, for the Philly Fed manufacturing index, same as Empire State, just for Philadelphia, another massive upside surprise, right? 15.9 on a forecasted negative print. This shows manufacturing resilience. Again, this shows the business cycle still has a lot of room to turn up and go forward. It's not a direct liquidity driver, but it helps keep the Fed from sort of panicking, right? Bitcoin thrives when central banks are boxed in by stability and disinflation. So all in all, really good news across the board. Next week is also going to be pretty hot in terms of releases. You have Powell speaking on Tuesday, and then you have some home sales stuff and the PMIs, which I think are going to be the most important thing next week. Another kind of interesting bullet point that I called out on my X feed that I wanted to share with y'all is this is a chart of the ETF purchases versus new Bitcoin supply. And the ETF purchases are the blue bar. So you can see that ETFs have been purchasing quarter over quarter, almost double, in some cases more than double, what Bitcoin is currently minting in terms of new coins, right? So miners actually mining and minting. This kind of leads me to believe at some point there will be a supply shock narrative. Probably not right now, but if these inflows keep going up, at the end of the year, you could definitely see some supply shock sort of news coming out, and that could really drive the price to basically euphoria, which is where you should be taking profits, by the way. So anyway, all in all, really good news. We could take a look at the Fedwatch as we usually do, and then I'll jump into the charts before we go on to the spreadsheet. So again, for this month, for July, it's a shoe-in that there will be no cuts, right? It's 95% no cuts. Fed's behind the curve here. Let's see what we had for September. This has basically stayed the same. I think this ticked up like 1% from the last video. So it's still crazy to me that 40% in September, we still might not have a cut. We'll see how this kind of evolves over time. And again, the probabilities here really haven't changed. So not much to talk about here. Let's take a look at the Bitcoin liquidity regime macro tracker as we always do. So the one thing to note here down on the bottom right is we were neutral last week. The cycle phase itself has flipped into expansion, which is really, really good. You can see some positive general performance sort of going a little bit upwards, right? Trending upwards, kind of based out here at about 65 and has been trending up since then. Again, with global liquidity, as you can see here, which is the green bars, we still have a lot of room to run, right? This says 150. I've seen some models going all the way up to 180. I've seen some models at 140, but the TLDR here is that number go up. Another thing I wanted to note, there was no huge changes in any of the scores really, so we don't have to talk about that. But I did want to show Bitcoin dominance. So a lot of alt season talk has been happening this week. Alts have been getting a bid, and that's because of this, right? Bitcoin dominance has sort of topped here, had a strong down move, and it's going to be really important to see, are we here? Which it's going to kind of come back and test. I drew this red arrow because this is what I think is going to happen. If there is a true alt season, this is what you want, right? You want it to sort of retest, make a lower high, and then basically start a downtrend, right? We have not had a sustained downtrend since 2022. So in over 3 years, we have not had a sustained downtrend at all. So if we get, we did break this structure right here, we'll see if that actually holds. But if we do get lower lows and lower highs, this could be your alt season for the first time in a long time. So if that's your thing, definitely keep an eye out on the Bitcoin dominance chart, and we can get back to the next portion, which is the final portion, the macro weather forecast. And as you can see from last week, nothing here has changed. The scores are exactly the same. And all the institutional research that I use, they're all still extremely bullish. So that's pretty much it. I have nothing to say about that. We're risk on. You should be in the markets. You should be allocated. This is not financial advice. This is just my perspective. And we can take a look at the crypto quant. Again, the IFP is still bearish, even with all the, even with prices holding up above 115K. This is still not flipped yet. So this is the only bearish indicator left on my sheet. Bitcoin bull bear market cycle indicator, still bullish, no changes there. MVRV Z-score bull versus bear, still bullish. Again, no changes there. I didn't really see anything else in the data that was too impactful or anything really worth calling out. Short-term holders, which is retail, are still selling, while long-term holders, which is usually smart money, still accumulating. This has not come off really that much, if at all. So still very bullish, really good signs. The LTH STH stopper has basically reset, which is also a really healthy sign in terms of leverage. Retail investor volume, this is something I called out last week, has ticked up above 0%, but you can see it's barely moved. So all still positive, nothing really here to call out in terms of anything being too bearish or too alarming. And that's pretty much it for this week. That's pretty much it. It was a great week. Things are going as planned. So as always, if you enjoyed this, consider giving me a subscribe. It would really, really help my tiny, minuscule, obscure channel, and I'd really appreciate it. I do these every week, once a week on Fridays. We decode the macro, we go through the data, we see what's going on, we look at the system, see if we should be risk on or risk off, and then make decisions on a weekly basis to keep ourselves on the right side of the markets. Thank you for watching, as always, and have a great weekend. We'll see you next week.